Boeing shares are seeing a nice little boost this morning after the embattled airplane manufacturer reached a tentative agreement with its largest union to avert a strike here. For more on this, let's bring in Ron, my gosh, what is it, Monday? Ron Epstein, who is the Bank of America aerospace research analyst. He has a hold rating on Boeing and a $200 price target. Boeing themselves, Ron, have a fresh new deal. It's slated to be voted on as well here, we should note, so not totally ratified, but are you anticipating that it will go through? Does it look like the union has what they were pushing for?
Yeah, I mean, on one hand it does. On the other hand, it doesn't. So it's, to be honest, it's hard to say. After the union leadership said, "Hey, you know what? This is okay," the social media feeds with the union kind of blew up. Now you don't know what to read there because sometimes the most vocal people are the ones that are on social media. They got a lot of what they wanted. I know one of the key things that the union leadership wanted was a view on future work, right? So a key piece here is if in the next 4 years Boeing launches a new airplane, a lot of the work, I mean, a lion's share of the work will end up in the Puget Sound, and that's what they were looking for. And I think that's one of the key reasons why the union leadership said, "Hey, this is a good deal." But the balance here is, if you look at what happened in terms of broader comp, Boeing's outgoing CEO had a huge raise. I think his was 43% or something like that, or 34%, excuse me, up year on year, and that's not lost on the union. That their pay increase over the length of this contract would be 25% increase. So we'll see how it goes. I'm hopeful that the union ratifies it, but I would say at this point it's not a slam dunk, but it's definitely a move in the right direction.
Ron, when you take a look at the stock's reaction, obviously there's lots of optimism going off of what you just said. How big of a win would this be? Is this potentially for Boeing? And do you see further upside in the stock if it in fact is approved later this week?
Yeah, well, I mean, we clearly do see further upside. I mean, our price target's above where the shares are trading today. Now, this would, the issue with the strike, and I think this is key. One, I think broadly consensus was they're going to have a strike, right? So if they don't have a strike, that's clearly a positive surprise, right? So hence you're seeing the reaction in the stock. Two, as you all know, there's so much going on at Boeing right now in terms of challenges, both in the defense business, the space business, the commercial airplane business. Really, the last thing that the company needed now is a labor challenge, is the union to go on strike. Strikes like this, particularly in the commercial side, can be very hard to recover from, but they haven't even recovered from COVID and the 737 shutdowns and the 787 shutdowns. So it just sort of makes kind of all those bad things even worse. So if they can get this behind them, and this is just one less thing that they have to worry about, that's a big win. And then the second thing I would say, you have a new CEO who's been in the role for a couple of weeks, and if they can get through this without a strike, this would definitely be seen as I think a huge win for Kelly Ortberg, like I said, who just hasn't been there that long, kind of setting up a new footing with labor.
Ron, labor is included as the cost of sales for Boeing. So ultimately, how do you see the cost of sales as a percentage of revenue kind of either remaining consistent or having a material difference as a result of this deal, and for how investors should think about that?
Yeah, so when we were playing with the numbers on their, the union had said that they wanted at least a 40% pay increase over a period of 3 to 4 years. With this contract offer, they got a 25% increase. With a 40% increase, we were modeling it was probably about $1 billion of extra cost. So in this case, right, it'd be about 15% less. So you're talking maybe call it 800 million of extra cost, 850 million of extra cost for Boeing.
So Ron, this would be a big step in the right direction here for Kelly Ortberg. Like you just said, looking ahead then, beyond what's happening here today, what is the next big challenge that Kelly needs to worry about? What should be that top priority?
Yeah, well, it's a number of things. So, one thing that he has already said that he's done himself, he's moving to Seattle, right? He's moving to Puget Sound. I wouldn't be surprised if you see the headquarters of the Boeing company move back to the Puget Sound. I mean, it makes sense to be co-located with your largest manufacturing location, one. And then changing the culture of the company. And there's been a lot talked about this, written about this. But why are you seeing all these deficiencies in terms of engineering, manufacturing, so on and so forth? It has to do with culture. So that's a top-down thing. So I would imagine the next thing he'll do is start, changing the chess pieces on the board, bringing in some of his trusted, colleagues and then people he's worked with over the years to start really pushing, culture, from the top down. Just to remind everybody, Kelly was a longtime executive at Rockwell Collins. Rockwell Collins was a company that was very well respected by their customers, loved by their employees, and so on and so forth. Collins, I think you could hold up, on a pedestal as having a very good culture. So trying to rebuild that kind of culture at Boeing, and then that will bring forth the improvements in the commercial production, what we need to see in the defense business, potentially the space business, maybe playing with the portfolio. There's been some written about maybe Boeing selling off some non-core assets to raise some money to help shore up the balance sheet, that kind of stuff.
All right, I'm already going to set up my tour of that Seattle, Tacoma, and the Seattle Puget Sound operation. I couldn't do it last time I was in Seattle. They still had some COVID rules in effect.
I recommend it. It's a great tour.
Yeah? Okay. All right. I'm going to put it down on my calendar. Just lastly, while we have you here, Ron, I mean, you talked about the culture. You talked about this leadership change. What type of timing are you grading Boeing on to see a real difference in how the operations now post Spirit Aerosystems acquisition, now post new CEO, and now post what is going to be a major ratification of a new labor deal? What is that time frame, the kind of window of cushion that you give them to really turn this around?
It's going to take time. It's a very large company. It's a very complex company that makes very complex products. One of my fears is investors tend to want everything now, next week, next quarter. This could take a number of years. I mean, I wouldn't be surprised to get a full turnaround of something like this. Could take 5 to 7 years. Now, it's not going to take that long for this to get priced into the stock, but sometimes investors do get ahead of themselves. And my advice to investors would be, you just have to be patient. If you look at GE as a case in point, where you saw a turnaround, it took a while and then it really worked. Boeing has as much potential of a turnaround like GE did, but it's going to take some time. And in some ways, the Boeing turnaround is very, very complicated because some of the issues at Boeing are more complex and more deeply rooted.
Does that mean we shouldn't expect any new aircraft innovation in the near term then?
I think they're going to have to do it. I've said for a long time that Boeing should do a new airplane, needs to do an airplane for a number of reasons. One, they're losing market share to Airbus and kind of this middle of the market, large narrow body, small wide body market. And then two, if you don't exercise that engineering muscle, you lose it, meaning you just lose people. And we're in a market today where there's no shortage of really interesting things and interesting companies for engineers to go do. I mean, you can go work on electric aviation, hydrogen aviation. The big defense contractors have all kinds of interesting stuff going on because where defense budgets are. So there's a talent, there's a war for that kind of talent. And if that talent isn't being challenged or doing fun things at Boeing, they'll do it someplace else. So if one of the key reasons to do it is to kind of keep that engineering workforce around. But we've done estimates, and we think the market for a new airplane could be upwards of $70-80 billion. I mean, it's a big market.
All right, Ron Epstein, always great to get your insight and talk to you here, especially on a day like today. Bank of America's aerospace research analyst. Thanks so much, Ron.